Welcome. Today, let's talk about employer-sponsored life insurance, a benefit many people have but don't fully understand. It's a life insurance policy your company provides as part of your benefits package, designed to give your loved ones a financial safety net if something happens to you while you are working there. Usually, your employer pays for a basic amount of coverage, often equal to 1 or 2 times your annual salary. You're automatically enrolled. No medical exams, no long forms. The money your family would receive is called a death benefit. This would go to your chosen beneficiary only if you passed away while you were still employed with your company. It's a simple, no-fuss way to get some protection for your family. You sign up when hired, name your beneficiary, and your employer handles the rest. You might not think about it daily, but it's there, quietly providing a cushion for your family. Remember, this is just a starting point. It is not the full solution for most people. Let's look at why this benefit matters. What is the biggest perk? Cost. Basic employer life insurance is usually free to you. Your company pays the premium. Some employers let you buy extra coverage at a group rate, which is often cheaper than buying on your own. It's easy to get. There are no health questions or exams for the basic policy. Guaranteed acceptance means even those with health issues can get coverage. Enrollment is simple. All you do is check a box, name your beneficiary, and you're done. There is no shopping around. There is no complicated paperwork. This convenience means more people get covered without hassle. It's instant peace of mind, especially for those just starting out or without much savings. Even if it's basic, it's a valuable safety net. For many, it's the first step toward protecting their family's future. But is it enough? Let's find out. Employer life insurance coverage has limits. The biggest is tied to your job. Once you leave the company, your coverage usually ends. Converting it to an individual policy is possible, but often expensive. The coverage amount is often just 1 or 2 times your salary. This is not enough for most families' needs. Think about your mortgage, daily expenses, and kids' education. 1 year's salary won't last long. Your employer controls the policy and can change or cancel it at any time. Your life changes over time. This can be because of your marriage, your kids, or a new house. Your need for coverage grows, but your employer policy doesn't automatically increase. Even if you buy extra coverage through work, it's still tied to your job. Relying only on this plan can leave your family underprotected. It's a good start, but not a complete solution. Let's see when it might be enough and when it's not. Is employer-sponsored life insurance enough? Sometimes, yes. If you're young, single, with no dependents or major debts, basic coverage may be sufficient for now. It can cover funeral costs and small debts, easing the burden on your family. If your partner earns enough or you have significant savings, you might not need much more. But for most people with dependents, a mortgage, or big financial responsibilities, it's not enough. Experts recommend coverage equal to 10 or 12 times your income, not just 1 or 2. The gap between what your employer provides and what your family needs can be huge. Consider your debts, children's needs, and future expenses. For most, employer coverage is just a starting point. So, what should you do next? Start by checking your current coverage. Log in to your benefits portal or ask your human resources department. Find out how much coverage you have, who your beneficiary is, and whether you pay for it. Next, calculate what your family would actually need if you were no longer there. Think about your debts. living expenses, and future goals. Use online calculators to estimate the right amount. Compare your needs to your employer's coverage. If there's a gap, and there usually is, consider buying supplemental life insurance. Supplemental coverage through work is easy, but still tied to your job. For real security, get your own life insurance policy. It is portable and stays with you. Employer life insurance is a great benefit if you die while still working at your company, but it's just the beginning. Review your needs, fill the gap, and give your family true peace of mind. That's how you build lasting financial protection.